Welcome to today's episode of Crypto Corner, my friends. Today I'm coming to you from the heart of Bangkok City, where I've been for the past couple of months. And this is my last week here, so why not take the camera outside for a change? We are here to talk about Bitcoin Layer 2 solutions today. In a previous episode, I talked about Ethereum Layer 2s, so this time I take you back to Bitcoin, and my guest is an OG in the crypto space, Josh Scigala, who is now working on an over-collateralized stablecoin and has a long history with Bitcoin. In fact, this guy has been involved with crypto since day one, the launch of the white paper. We're talking pre-2010, so naturally I had loads of questions, but I tried to stick on topic. This will be a very insightful chat, so grab a drink and let's dive straight into it. All right, well, Josh, thank you very much for coming to my channel. I'm eager to speak to you. I know that you've been in the blockchain and crypto space for a very long time. So let's first start with how did you get involved? How did you first find out about Bitcoin? How it all started?
Oh, well, that's a long story. Yeah, basically I was already looking for a solution for not a decentralized money, but a money that wasn't run by central banks, and I didn't need to control its issuance. That's what I was looking for, because I was running a swap site where people could swap clothes. But I realized very quickly that that was a terrible way of doing any transaction, because if another person doesn't like another person's gear, then the deal falls through. So it would be great to have a currency, but I didn't want to, as the person that ran the website, issue the currency, because then we're back to square one. The whole point of swapping was to get away from banks and all of these sort of things, get away from money, and fiat money. And so then I started looking for this exact thing back in 2004, around there, I think, and it didn't exist. I found what the cypherpunks were working on, and they didn't seem to be able to either have the problem fixed. And, looking through their mailing list and everything that they were chatting on. But they were chatting about some great stuff. So I internet privacy and all of this other stuff. And so I kept an ear out on what they were doing. And then in 2010, the Satoshi's white paper came across my table. And I was like, wow, she's cracked it. This is it. This is the double spend problem solved. And ever since then, I've been down this rabbit hole, and I launched the very first Bitcoin physical gold exchange, where people were, instead of using a bank, because back in the day, everyone's bank account got shut down as soon as they cashed out any Bitcoin. The banks would just say, well, because all the headlines were about Silk Road and drugs and everything like that. So they still are.
The mainstream narrative is still revolving around that.
Absolutely. If you don't have a Bitcoin-friendly bank, they'll just shut your account down. It really sucks. And so we created a way to basically cash out into physical gold, secured in a high-security vaulting facility in Switzerland that was fully audited and fully insured. So it's better than a bank account, because your bank account's only insured to 100K. And it's still going now. It's called Vaultoro. VAULTORO.com. And so you can basically trade, instead of trading between fiat and Bitcoin, you trade between gold and Bitcoin. And there's an order book and there's a OTC desk and stuff. And that was a big step forward. And then 3 years ago, I started working on stablecoins, because I think they're a really big, important part of this whole game. And then I gave a talk about how a big one's going to probably crash, get really big and then crash and die. And it's probably going to be algorithmic, and it's probably going to be Terra Luna. And sure enough, that happened. But luckily beforehand, I started already working on a over-collateralized stablecoin protocol that I like to call the ultimate stablecoin protocol, because it's really taking the best of what Maker forged in the beginning, and a lot of the stuff that, gold bugs and Bitcoiners and stuff been working on, and looking at, and sort of combining everything, the best of the good things, and coming up with something really, really solid. And that's what I'm working on now, called thestandard.io. But the thing is, Coins are very, very dangerous. It's very easy for a bad actor to come in and bring a coin in, and basically, if you have a centralized stable coin, then there's a whole bunch of fiat sitting in a bank account. So first of all, the bank can't be audited, really. It's very, very difficult to audit a bank properly. Even an auditor will have problems because there's a lot of liabilities and things that are off the books. The bank don't want any auditor to know. There's a lot of shenanigans going on. We all know this in the banking system. And so you have the bank speculating with billions of dollars of maybe Tether or whatever's backing Tether. And I'm not picking here only on Tether. There's USDC or all the major centralized fiat coins. And then you have the stable coin being speculated. So you've got both sides being speculated on, rehypothecated like crazy, meaning they print more than they want on both sides. So and there's no real audit trail. So that's a bad one. Then you've got the stable coins based like BitShares was an early one of these algorithmic stable coins. Then you have Waves and the latest one, Luna. These are just terrible. You're basically you're backing a stable coin with absolute fluff, with nothing but some sort of other altcoin.
You're backing it with altcoins that are very volatile. So I also don't really know how that works. And I never really trusted Luna, or now Tron has a algorithmic stable coin. Is it USDG? I think something like that.
Yeah, USDD or something like that. Terrible. Absolutely. And Tron is going to go the same way. I mean, it's just not, if they're not backing it with at least with something like Bitcoin, even that, you want to have mechanisms in place to deal with that. But pure algorithmics are a pipe dream. And, they use all these words like, oh, well, it's economically more, it's more efficient and all this sort of thing. No, it's not. It's very, very inefficient when you lose billions of dollars. So what we're working on is a truly over-collateralized stablecoin that where the users lock up funds, and Maker was the first one to do this but a user would lock up funds into a smart vault or into a smart contract, so they hold the keys. They don't not have the keys. So not your keys, not your crypto. This is the old mantra, right? So what you would do is actually lock up assets into a smart contract, lock it, and then be able to mint stable coins from that. And this is a very normal thing in DeFi, and it's a very, very solid, economically sound and theoretically sound principle, because it's basically what the gold standard was. Governments would lock up gold and issue themselves debt according to that gold, and that gold would be a one-to-one swap. So that's what we're building on the standard, but we're really making it next generation. So it's going to have some fantastic features that I think people find very, very fascinating. For instance, if you have a whole lot of Bitcoin or Ethereum and you want to buy a car, but you feel Ethereum's going to go up in price, you don't want to sell your Ethereum or your Bitcoin. So instead, you put it into a smart contract, you lock it, you generate up to up to 85 you can, but let's say you stay safe and do 50%, and then you buy the car. Now you've got a car and your Ethereum. Ethereum's going up in price, fantastic. But then you lose your job and you can't pay off your debt. Let's say Ethereum's now dropping in price and it's going to maybe get liquidated. If it drops below the amount that you borrowed, then the smart contract basically sells the collateral. And what we're building is a way for people to sell their debt as an NFT. So if you've locked up a whole bunch of funds and you can't afford to pay your debt back to take out the collateral before it gets liquidated, you can actually sell your locked assets as an NFT. So whoever has that NFT can unlock that smart vault by paying off the debt and getting out the collateral that's worth more than the debt. So these sorts of things are really interesting because we're taking financial principles and adding and they're taking them from Wall Street and stuff that have no checks and balances, that have just contracts and things like Sandbank and Free that happen all the time in those places. Just they're covered up by insurances and things. Although Sam was an extra large one, these sorts of things happen all the time. So by putting them onto smart contracts, you don't have that issue because you basically can see mathematically how much collateral is locked up, how much debt is issued by that collateral, and there's nothing else that can happen. And maybe we can talk about transparency in centralized exchanges a little bit, because I think people are heading towards using DeFi now. Well, they should, because after SBF and after Mt. Gox, which was the one that I got hit by originally,
Wow.
We really need to say, look, enough is enough. Let's use DeFi. Let's build DeFi.
And there's already quite a lot of DeFi tools. We do have quite a few exchanges. There's Aave and other ones that are also in charge with the lending process, which is, Celsius is a good example for a centralized lender who, again, screwed up. And, it was quite a spectacular collapse last year. Last year was really bad. We did have quite a few big collapses. Terra Luna, which we mentioned, and of course FTX and Celsius and BlockFi.
3 Arrows Capital. It just goes on and on.
Yeah,
and it all cascaded from Terra Luna, and that's why
it all started indeed. And then 3 Arrows Capital, kind of added to the whole thing. Yeah, it was bad. Definitely, more and more people are now looking into DeFi solutions, and we need to see a bit more competition in the space so that they can become also more user-friendly and in terms of fees as well and everything. I really want to see more being built on blockchains other than Ethereum, purely for the fees, because it seems that I'm not really sure whether with the sharding we're really going to have a solution for the Ethereum fees. I find them to still be quite high, to be honest.
Well, yeah, they are high, and this is something that Peter Todd, he's one of the original Bitcoiners. He actually, when he was like, I don't know, he was like 14 or something, when he was on the Cypherpunk mailing list, discussing the problems of double spend and trying to solve Bitcoin. What was I doing when I was 14? I don't know. Not doing that, that's for sure.
Definitely not even close for me.
Yeah. And Peter has said for a long time that Ethereum's a scam. Now, I because he said it just cannot scale, and they're telling everyone it can, but they can't. Now, I don't agree with him, because a lot of very smart people in the past have said things like, well, there'll never be any use for a mainstream computer, and now everyone's got a computer in their pocket. They'll never be. There's countless things that just because Peter is a very smart guy, and I really look up to the guy in terms of his achievements, I do think that there is a lot of great work, and everything that my technicians and the team that I have around me also state, look, yes, Ethereum's going slowly towards scaling, but the direction that they're choosing, and they're taking a long time to choose the right direction, is the right way to go. So when sharding happens, which will happen first of all through the proto dank sharding, which is from one of the two of the cryptographers working deeply in that space. The sharding is basically there to help layer 2. The first step is to shard actually data storage on Ethereum. So yes, base layer Ethereum is probably will get a little bit cheaper, but basically they're working on everything to make layer 2s even cheaper, because a lot of the promises of layer 2 are also falling through now. They're getting expensive on heavy days. So I think the next step of Ethereum really is this dank sharding, and that's about about reducing the fees for layer 2 when they settle onto layer 1.
Yeah, and talking about scaling, let's also touch on Lightning Network and Bitcoin scaling as well.
Yeah.
And we very briefly started talking about this last time I spoke to you, but let's start with the Bitcoin scaling. I mean, the big debate was a few years ago. Then we had the hard fork. What was your stance at the time?
My stance at the time was I was running a business, right? And the business was getting hit by fees because the promise was always, hey, Bitcoin is for the unbanked. And we used to make memes about, that MoneyGram would charge people $5 or 10 or 8% or something like that, or 10% to do a transmission over from a transaction from America to, like, I don't know, Bangladesh or something. And we would be like, oh, Bitcoin, half a cent, and this was always the promise. And obviously when we were running a business on Bitcoin and the fee started to go to $5, $10, and then when you do a send many, like a larger transaction to many addresses, you're looking at $30. This is breaking that promise that we've been telling everyone and ourselves. Now, so, the business was suffering a lot. So, and there was the small blockers and the big blockers. So the big blockers, they wanted to just have a larger block limit. That means more transactions could fit in a block before. And the small blocker said, no, it won't scale. And so our business, Vaultoro, was one of the first to sign the 2X agreement, which basically hoped to move the stalemate by each side, saying, well, let's allow us to do SegWit, and we'll double the block size, and then we can go from there. So then everyone was up in arms about that. But then the big blockers actually forked off and created Bitcoin Cash. And so we didn't need to do the 2X fork anymore. It wasn't needed. So I then withdrew my signature from that agreement because why do it again? The thing is, if humans are insatiable with what they need. When I started working, I was a 3D animator for a very long time. I worked in back when silicon graphics machines were like sort of small fridges, and we could basically push just a few polygons around, and the render times were about 10 minutes. And then as computers got better and better, the clients just asked for more. Now we want, more polygons. Now we want, proper ray tracing. Now we want a subsurface scattering of light underneath the skin. Now we want oceans and particles and rains and hair. And so as computing got more and more, all that happened is that people wanted more and more stuff. Now, this is what would happen if we just made the block sizes bigger. People would just add everything in there. Every weather data, boom, every sort of smiley face, every mid-journey image that I create, I'm going to stick into the blockchain. So the human appetite for space is unstoppable. And so the other side of that equation is when you are writing smart contracts, and this is very, very important to understand, is that currently on Ethereum, if you write a very terrible bunch of code for your smart contract, and it's just this massive, ugly contract, then what would happen is that you could quite easily, well, first of all, the fees are going to be horrendous, right? So you don't want to do that. So, but if you did do that, the bigger the code base, the more bugs, the more stuff can go wrong. So you want to try to, when anybody writes a smart contract right now for Ethereum, they have to look at every line of code and really optimize everything. Now that has two effects. One is less attack surface and a more understanding of what every single line of code does. And B, when you have the cost factor. So if you write too much, it costs more. So if you had somewhere where you could just put any old smart contract, would have a hell of a lot of bugs. And smart contracts are one of these things that you just don't want bugs, because people end up losing their shirts, because if a contract's holding a vast amount of money, and it gets hacked, it's a terrible thing. And so,
Which has happened.
Having just it has, but yeah, I think big blocks aren't the answer. The answers are really on layer twos. But the problems that come with layer twos is the user experience is terrible. You have, I don't know, like if I'm sure your listeners have tried it and they've been on they get sent an address for, I don't know, some stablecoin, and they send it to the wrong chain, or it's a very, the user experience just isn't good. So I think the whole industry needs to work on that.
That happens a lot, actually. I did have an email just a few days ago from someone who did just that. I mean, it's a very good point that you were mentioning earlier. Before we move on, I want to bring you back to that point about the fact that people would always want to use all of the space, basically. In short, you increase the block space, people will immediately find more use cases and things. And with the Taproot upgrade that we had, is it now 2 years ago? Just over a year ago, it opened the door to having smart contracts and even non-fungible tokens on Bitcoin. And we just saw a report, it was earlier this week, that the first NFTs were launched on Bitcoin. So, and many people were outraged. And I would say quite rightly so, because we have had a low Bitcoin fees for a good couple of years now. Is it really time to start filling the blocks again and start struggling with space and subsequently fees as well? Isn't that what's going to happen? What's your take?
Yeah, I mean, first of all, it's maybe probably marketing to say that it's the first NFTs, because Bitcoin had what was called colored coins years ago, even before Litecoin launched. And these are basically a way where you could color in a coin and follow it around the network. And that's what an NFT is. It's a way to follow a coin or make it unique. And so I think it's probably marketing hype to say it's the first NFT on Bitcoin. It was just called something else back in the day, but maybe there's something special about these that I don't understand. Haven't looked into it, to be quite honest. But yeah, I really.
They're inscriptions, and they can even be JPEG images and things that are slightly more than just adding a different identity to a certain coin. But they are distributed as just satoshis. It's still a transaction.
Wow. Yeah, I mean, it's cool. And I mean, I really like what the Blockstream guys have done with Liquid as a side chain. I love what the Lightning Network is doing. The guys at Lightning Labs and at Blockstream, and the whole bunch of teams all over the world working on that. Great friend Ben Ark of mine, he has built some of the most epic stuff on Lightning Network. And all of this FUD that goes around about, oh, Lightning can't do this or that, it's all nonsense. It's amazing. You're basically sending pre-confirmed transactions that have got 100 confirmations in them, so you don't need to wait. And it arrives instantaneously and has the security of 100 confirmations. It's definitely something that people should try out. Download yourself a Lightning wallet and just look for some Lightning applications online and just try it. With a couple of satoshis, you can. It brings that promise back.
Network wallet do you have experience with and you can recommend? Because very soon it will be that point where we will be using Lightning Network and maybe some other layer 2s.
Yeah, absolutely. I really like Blue Wallet. I think it's a really solid wallet. It's got some great Lightning features, and it's got a normal Bitcoin wallet in there as well. There's also a wallet of Satoshi. It's also very good. Those two are the good ones. The other wallet that's quite good is Electrum. Sorry, I just wanted to say, a good friend of mine, Thomas Vogtlin, I never know how to pronounce his last name. Sorry, Thomas. He actually invented light wallets. Electrum was the first wallet to allow you to have Bitcoin on your phone because it built servers Electrum servers that you could just basically query from your phone, so you wouldn't need to run the whole chain on your phone.
That's a good one as well.
But
I think that back in 2016 or 17, but it's probably since then, or maybe since 2018, I haven't actually used it, and I don't have the application on my.
yeah, I haven't used the Lightning one yet, but I know that he's been big on building and innovating with that. So I'll have to check it out. I haven't actually checked his implementation of it. But the beautiful thing about Lightning is, a lot of people say, oh, it's centralizing, it's this and that. The thing with software, it's very different than hardware. If you have to lay cables and then there's a bad actor, it's very hard there's a big switching cost. You can't just dig more cables around the bad actor. Talking about bad actors, I mean like states, I'm talking corporations, companies, anyone that wants to co-opt a certain aspect or sees a game theoretical reason to take advantage of someone in a certain way that actually is destructive to the network. The thing with the Lightning Network, it's software. So if there's a bad actor and your node is attached to it, you can easily spin up another node and just route around it and ignore this node always. And so the switching cost around bad actors is very, very quick and fast. So that thing that's always going around, oh, it's centralizing, it's really not. There's many, many nodes out there. Anyone can spin one up very cheaply, and it's I think it's probably one of the best things to come along outside of concepts of DAOs. I find DAO. Well, I fell off my seat when I found Bitcoin. I fell off my seat again when the first DAO was released and then it was hacked. But then, more and more DAOs came out, it became more mature. And I just love that concept of having many, many people own a corporation and not a corporation because that's a legal entity, but a project, own a project, partake in the project, not have to give their identity in a way of their flesh and blood identity, but their private key identity and their reputation around that private key, and have to build on that and be able to be rewarded in that. I just think it's just sensational. It really brings together some of the ideas of capitalism, which I love. I consider myself an anarcho-capitalist to a great degree, but I also like some of the ideas of some socialist ideas, like having cooperatives where everybody has a part of a business, and that's exactly what a DAO helps you have. Yeah, the Liquid network is really amazing because it also adds privacy to Bitcoin, and it's a very, very interesting. You can go to Blockstream's website and download the Green Wallet and just see. And the good thing is, it doesn't have that. They don't have their own coin. You basically bridge Bitcoin across to it, and you get LBitcoin, LBTC, which is Liquid BTC, and then they have smart contracts and all sorts of stuff over there as well, and it's faster. And then you can trade, bring your Bitcoin back on chain afterwards. So this is a very exciting move as well. It's sort of similar to the Lightning Network, a little bit different. It's more of a side chain rather than a multi-sig like Lightning is, but it's very, very cool. I definitely encourage anyone to come to the standard. We aim to be the standard in stablecoins. We are currently releasing the S-Euro, the first stablecoin, which is a euro-pegged stablecoin. You can go over to the standard.io right now, and we're doing a launching event where we build liquidity. And so we're doing that by selling the first S-Euro at under a euro. And as more and more liquidity comes into this protocol, this smart contract, that discount becomes less and less until it reaches a 1-to-1 peg. So this is the base level, and then you can take those S-Euros and actually buy a bond by putting into a liquidity pool, and this helps us over-collateralize that very quickly, and you get it's quite a high yielding bond. So if you like interesting things, it's definitely not investment advice. It's all crazy stuff. So do your own research, but we're a great team. We've been in the space for a very long time. We know what is needed in the space for it to succeed, and yeah, we're looking for talent to join us on a mission to change the world for the better.
Fantastic. I will have the links in the description below for all of you guys. Josh, thank you very much for coming to this call. I hope to do a follow-up. Definitely we're going to meet again and we're going to continue this topic because there's quite a lot of things to discuss. We can't wrap it out in one. But yeah, thanks very much for
anytime, Jordi. I'll be back. Cheers.
Pleasure. All right, so this wraps up today's episode. We had a great discussion with Josh, and I'm super glad that you're still watching this. It means that you liked it too. I dropped links to all of the websites that we mentioned on the call in the description below, and you will also find some other links there to services that I use and that I recommend. Now it's time to continue exploring my surroundings. This is my last days in Bangkok, but next week I'll be coming to you from Vietnam, so stay tuned.